In our last briefing, we identified the 5 primary exit doors from the collapsing paper economy. Today, we perform a deep dive technical audit of ticker number 1, XME, the S&P Metals and Mining ETF. As of today, March 31st, 2026, the global financial markets are undergoing a massive institutional rebalancing. Trillions of dollars are rotating out of speculative software and into the physical substrate. This isn't just a market shift, it is a structural realignment of power. If you are watching your portfolio today, you aren't just seeing price action, you are seeing the architects of the New World Order placing their bets on atoms over pixels. To understand why XME is the foundation of the architect class, we must look at the math behind the scarcity. On March 30th, Jerome Powell admitted that the Federal Reserve is fighting a new kind of inflation, one driven by the physical energy and material requirements of the AI revolution. This admission is the white flag of the fiat system. You cannot print the steel required for a hyperscale data center. You cannot print the aluminum needed for high-efficiency cooling systems. XME is the vehicle that captures this reality. It represents 37 of the most disciplined mining and metal production companies in the world, currently trading at a price-to-book ratio of approximately 2.27. While the tech sector is bloated with 20 times earnings multiples, XME is offering a foundational entry point into the actual infrastructure of the 2026 economy. The first layer of the audit focuses on steel and aluminum. Every single hyperscale AI data center built this year requires up to 20,000 tons of structural steel. As global data center capacity is projected to more than double by the end of this year, the demand for high-strength alloys is no longer a projection, it is a floor. The companies within XME are not just miners, they are the primary processors of these critical materials. By owning the ETF, you are effectively owning a royalty on every data center, every modernized power grid, and every autonomous logistics hub being built across the G7 and BRICS nations alike. But the real leverage in XME comes from its equal-weighted structure. Unlike market cap-weighted funds that are dominated by 1 or 2 giants, XME gives you exposure to the mid-cap producers who are the primary targets for institutional acquisition. In 2026, the theme is supply chain security. Large-cap tech and energy firms are no longer content to buy metals on the spot market. They are moving upstream. They are acquiring the producers. When a mid-cap steel producer in the XME portfolio gets acquired by a sovereign wealth fund or a tech titan, the jump in valuation doesn't just benefit the insiders. It flows directly into the NAV of your holding. Now, let us move to the mechanism of execution. To audit XME like an architect, you must look beyond the ticker symbol. Open the State Street Global Advisors fact sheet and look at the sub-industry breakdown. Currently, steel and aluminum account for nearly 60% of the fund's weighting. This is your hedge against the energy price spikes Powell mentioned yesterday. When electricity costs rise, the cost of producing new metal skyrockets, which increases the value of the existing inventory held by the companies in XME. This is a self-reinforcing loop of wealth preservation. Your first micro-execution line for today: audit the price-to-cash flow ratio of the fund. As of this week, it sits near 15.92. In a high-inflation environment, cash flow is the only truth. Compare this to the broader S&P 500, which is struggling to maintain its margins as labor and energy costs climb. XME's holdings have been cleaning their balance sheets for 5 years. They are lean, they are efficient, and they are generating free cash flow at a rate that allows for aggressive dividend growth and share buybacks. You aren't just buying a commodity play, you are buying a cash flow engine that is fueled by the world's desperation for raw materials. The second micro-execution line: monitor the equity beta of the fund. Currently hovering around 0.94, XME is actually showing less volatility than many of the high-flying AI stocks that the retail public is chasing. This is the hallmark of the architect. We seek high-conviction asymmetric upside with a controlled downside. While the tech sector is vulnerable to a sudden shift in sentiment, the physical demand for copper, steel, and lithium is baked into the global infrastructure for the next decade. There is no version of 2027 that requires less metal than 2026. Finally, we must address the geopolitical leverage. As the global order splits into competing supply blocks, the companies within XME that have domestic American or European operations are becoming strategic national assets. We are seeing a move away from the just-in-time procurement model toward a model of strategic buffer stockpiling. Governments are now the primary buyers of the materials produced by these companies. When the customer is a sovereign state with a printing press, the price ceiling effectively disappears. This is the ultimate alpha. The March 31st deadline is here. As institutional rebalancing concludes this evening, the window for a clean entry into the substrate of the economy is narrowing. Tomorrow, the world wakes up to a new quarter, and a new reality where the scarcity of atoms is the primary driver of wealth. Audit your portfolio tonight. Look for the zombies, the companies that produce nothing but digital promises and debt. Replace them with the architects of the physical world. In our next session, we will break down ticker number 2, URA. We will analyze the nuclear renaissance and the specific data center contracts that are turning uranium into the most sought-after fuel of the decade. Subscribe to stay equipped. Move your capital from the shadows of the paper economy and into the light of the physical truth. Stop being the liquidity. Become the architect. I will see you in the audit.